Hey everybody, welcome back to the channel. Today I want to go over the AM Silver Bullet on Friday, August 25th. I took a loss and a winner on this day, so I wanted to show you how I was trading it and what happened. So we are going to try and replicate that in TradingView. I'm going to buy and sell based on our rules here. It's going to be entries and exits are going to be a little off because of limit orders and fills. So our fills are based on close of candles on TradingView, so it's not on limit orders. So it's a little bit different, but we're going to go candle by candle. So if we came to the chart right now, we were definitely on an uptrend right there. You can see this phantom line right there. Either way, we're trending up, right? So we want to see, are you going to keep trending up, or are we going to break structure? What are we going to do? So let's go candle by candle. Let's see what happens. The dark gray background is what starts the 10 o'clock AM Silver Bullet hour for me. Okay, so we're going down. All right, so buy side liquidity has been taken, right? Let me throw up the rules up here that I trade by here, just so we can see what they look like here. Okay. All right, so higher time frame liquidity has to be taken. Obviously, this is the higher time frame that is the highest high of the day, so it's been taken thus far. So obviously, higher time frame, the liquidity has been taken. Then I'll need a swing high, swing low broken. So right now, I'd probably want this low broken, but it kind of already was here, so I'd probably want this one broken, to be perfectly honest. Then displacement that formed a fair value gap. Obviously, this is a reversal model, is what the 2022 mentorship model is. It's not a continuation, so I'm looking for a reversal. That's what this is. All right, entry 1 to 2, and we'll keep going. So let's see how it plays out here. Okay, that's good. Close. All right, so there's a fair value gap right there. All right, so then we have this sell side taken. We have their market structure shift here. But let me tell you why I don't like this right here. Because this, I move this box out of the way here and put my crosshairs on. You can see that this right here was also taken out. So we've taken quite a bit of sell side liquidity right here. I would have ideally liked to have been pulled back up before taking this, because it would have been easy, low-hanging fruit type targets. And there's this low right here, which is in a new week opening gap, so that's always good. So let's just keep going here. All right, so this is trading up. Let's pull a fib from the high to the low, and equilibrium is right here. So if this fair value gap gets traded into, I will go short. We had our, we'll just call this our market structure shift right here to go down. Okay, so liquidity is taken, check. Swing high taken, yes. Broken, displacement, yes. Is it in around equilibrium? Yes, it's close to it. Entry 1 to 2. So if we get an entry up here, we'll take our trade. Okay, so we're selling 2 right there. We'll put our short order here, and we'll see how it goes. Okay, obviously I'm flattening way up here, which is not what would have happened, but it is what it is. There's nothing I can do about it. That's just what it is. I actually did take a loss here today, but it wasn't 5 handles. It wasn't 7 handles. It was maximum. It was 5. Right. Oh, I can't get it right there. So this is almost double the handles that we did. But it is what it is. We'll go there. Okay, let's reevaluate here. So I would need this to be broken for take this fib off. I would need this to be broken right now for a market structure shift to go long. Okay. right. There's a market structure shift to go along. We obviously have our fair value gap right here. Okay, let's just keep going. All right, there's a fair value gap right here. Okay, so where would we want to see? What would we want to see? Let's see. We pull the fib from here to here. Obviously, we want to get into the second one. We couldn't take a long in this one, right? But if it bounces off there, that'd be good. We'd take another trade, okay? But let's just see how this. Okay, so that closed there, so making this an inversion fair value gap. So what am I doing right now? I've already taken one loss, right? So I'm very reluctant to taking another trade here. I want to see how this reacts. If it holds price in here more than like a candle, like it stays in here and it starts rejecting, then I'll take a trade. But I want to see, I mean, again, it has to come back. It's got to go through this again. You know, I need to see this come out treat as support now, because right now it's an inversion. So now it comes back up. I'm looking for this to hold price down, and I don't want to be caught between these two PD rays, opposing PD rays. So I kind of want to see what happens here. Okay, so if it bounces off that, okay. This is now an inversion as well. Okay, so again, now this is probably buy side liquidity taken here. And this was just a liquidity grab to come back up, to take out more liquidity to come back down. Now I want to see this treat this as support, right? You also have this now inversion as well, right here. Inversion as well. Okay. So you also have this fair value gap right here. So if price comes up in here, I would take a trade, because an inversion, not that I need another market structure shift here, but ideally you would want one. But an inversion, you can count that as a market structure shift, because it definitely holds price down when it trades through it. So I would count that as kind of like I treat it kind of like a breaker block, to be perfectly honest. So if it trades back up into that, I'm taking a trade. Okay, it would have taken a trade right there, so I'm going to sell to there. My position right there would have got in, and I'm taking it to the new week opening gap here. So that is 1 to 3 is what I'm going with. So stop is above the inversion fair value gap. Okay. Let's take a partial there. That's how we would have done it. Let's buy one there. And now we'll keep going. Okay, and we'll flatten it. Okay. Even for the day, basically, $187. Whoop whoop. All right, let's see it now. Look at this. I want to show you how we played by our rules, right? We played our rules and it didn't work out for us, right? What we should have seen here was, like I was saying, that I didn't really like that the liquidity was taken from 3 higher time frame liquidity grabs. Basically, swing lows were taken out before it came up here. I didn't like that. Mentioned that before we took the trade, but we took the trade anyway. It did meet our rules, so we did still take the trade. It didn't work out. We lost. Great. Awesome. Move on. Came back on and we reevaluated here. This was still now going to the top side, because we're like, hey, this is a market structure shift. But then we saw that the fair value gap was just disrespected. The second one's disrespected. So we're like, okay, wait, hold on. Let's see what happens here. What's going to get respected here? And obviously it was respecting the PD rays going short. So let's see what the rest of the hour does. Just kind of stinks around and goes much further down. Wow, look at that. As I've said before, I wish I hold my trades longer and leave a runner. That's why I'm probably going to switch to the micros. I mean, just look. If you would have traded it down, you would have been, 37 handles. versus 15 we got. Would have at least doubled it, plus some. So that's your, this one really was your good silver bullet trade. This was not, but it did play by rules. And you, like I said, if you back test, you've got to trade. If you see your setup, you got to take it. And that's what we did. We took a trade, we took an L, and then we reevaluated. We got one, and it worked out. Had we had a left a runner on, we would have been much more in profit. But either way, still green for the day. That's a win. We'll take it. And that's your silver bullet setup for August 25th.